Hey everybody, Chuck Barone here. Tuesday, November the 8th, 2022, Election Day here in America. The midterm elections today, a very, very big day for the country. I think that speculation on this election leading the market today, very, very interesting time to be alive or live in history today, guys. Anyway, we appreciate you being here. As always, we just want to thank you for your support for the show, watching the videos, and your likes and shares and questions and comments. We appreciate you guys. We do. Markets today. Well, it is election day. Hope everybody went out and did their voting thing. You know, you got to vote. I know there's a lot of skeptics right now. And rightfully so, I guess. I don't really know. Honestly, I'm no student of this election stuff. I've always voted when I have an opportunity to do it, and always will. And I hope everybody will do likewise. You know, I've even seen young people protesting by not voting. That's kind of like, kicking yourself to punish somebody else. It's just, I don't know. Anyway, I hope everybody went and voted today. It's important stuff. Stocks today, up. Good day for the stock market across the board. I think what the theory here is that the Republican Party will win control of the House and the Senate likely, and the divided government will create gridlock, which is typically not a bad thing for business. The less our critters in Washington do, it seems like the better the country functions. Hopefully it won't just turn into a mudslinging contest with the usual stuff of investigations and show trials and, loser, I guess loser's not the right word, posers, right? Posing like they're actually doing something for us and care, just to get their 10 minutes in front of the camera. Anyway, it's good for business and it's good for the stock market. We'll see how it all plays out and we'll see what the results are. It's going to be a fascinating night tonight. We're going to have all kind of, I'm guessing it's going to look like the last couple of elections. It'll be pretty acrimonious. We'll have two different stories tomorrow morning. It'll be fascinating stuff. Anyway, stocks up today. At the same time, bonds also up. Prices up today with yields coming down. The 10-year dropping 8 basis points to 4.12%. And the 2-year dropping 5 basis points down to 4.67%. So the bond market actually has a little bit of a rally today. It's not something that's been regularly occurring in the bond market recently. I think that again is the market guessing this divided government thing will be good. It's typically divided government does not do things that inhibit markets. They think that these divided government will put more pressure on the Federal Reserve to pivot. Anyway, fascinating stuff because it's all, let's just face what it is. This is speculation today, right? We don't really know how it's going to play out. They're just kind of placing their bets today, and it's fascinating to watch it all happen. Dollar today down. Again, for the same reason, down to 109.65 on the dollar index. Dollar's still the champ, but the number's coming down. It was peaked up at 114. We'll see if that's going to come up as the high. With the dollar down again today, metals had a really good day. Gold surging up over $35 today, $1,712. Silver has a good day, up 53 cents today to $21.33. Metal's been looking for a reason to go up, waiting for that dollar to kind of make its way down a little bit. Nice little rally for metals today. On the other hand, though, surprisingly, other commodities today down. Oil down about 2.5% today, down to $89.16 for a barrel of West Texas Intermediate. Natural gas at $6.25 for their million BTU, down 10%. This market's just been swinging all over the place with gigantic percentages. These markets, I don't really believe, are designed to be moving 10% up, down, and all over the place on a daily basis. So it's really crazy watching the volatility. I'm not a big trader in gas. I'm not in the market at all. Just fascinating to watch these gigantic price swings. Bitcoin today, crunch, man, did not have a very good day, dropping almost $2,500 today, down to $18,350 plus or minus last time I looked. I have to dig in here. I kind of was browsing around to see if I could find anything as to the cause of this collapse. Really, that's what it is. That's a gigantic fall in one day for Bitcoin. I haven't been able to find anything in the normal media searches I do as to why this is happening. So if you guys know, put some info in your comments. Let me know. News you guys need today, not a lot happening. Everybody's waiting now for the elections and the CPI numbers coming later this week. But some interesting stuff. Consumers, I was reading today, are turning more and more to credit cards and unsecured loans, like these payday places and places like that, just to keep the spending going, guys. It's crazy. And this report comes from TransUnion, and they get reports on what consumers are doing every month. They're one of the bureaus we do in rating people's credit for home loans, right? They also said that payment delinquencies right now are in line with pre-pandemic numbers, but they're rising pretty significantly from last year. So here we go now with gigantic levels of debt, people having more difficulty paying that debt as all their other bills, the normal stuff that's usually pretty stable, your power bill, your food, and all that stuff, now going up by leaps and bounds. So you'll see these delinquencies start to tick up as people get more desperate. Credit card balances, listen to this number, guys, now sitting at a record high credit card balances, $866 billion on credit cards. That is a gigantic number. I mean, now you're getting near, how long do you go from there to $1 trillion at this pace? And that was interesting because it went on to say, directly pointing finger, I guess, or making note of, that the new debt is mostly being driven by Gen Z and millennial borrowers. So now what they're doing is they're trapping these younger borrowers into the debt trap, which I've been talking about on the show since we started it, how that's the one thing you want to avoid at all costs, being stuck in that debt trap where, when you get your paycheck, pretty much every penny of it is pre-spent for you on payments that you have to make every month on existing debt. And that's what I call the debt trap, and I'm sure a lot of other people do too. But where your basic existence is just to work and pay bills. That is no way to live, my friends. So we need to, avoid that at all costs. As you know, we've been harping on forever as well on the show. Please, if you can help it, don't be taking on any new debt, especially credit card debt with those outrageous interest rates. And if you can, even if it's just the smallest amounts, $20, $50, whatever you can afford, start to chip away at your existing debt. Get out of that debt trap. It's, the smartest guy I ever knew, my financial guru who helped me when I was a young man getting started. He used to emphasize way more than what you earn was how much you owe. And what is your monthly nut every month you got to make just to, live your normal life, right? And that was the thing he used to focus on like a laser. Keep that monthly nut small. He used to ask all the time, who's better off? The $50,000 a year guy who's living comfortably within his means and is saving money, or the $200,000 a year guy who's got debt up to his eyeballs and needs every penny of it to satisfy that debt, that lifestyle, and that tax burden? You tell me, So anyway, these young kids now getting into the debt trap, $866 billion on credit cards. Wow. Also today, home builder confidence comes out. Of course, it's at its lowest level in a decade. Bad news everywhere for real estate, as I've been telling you guys on the show, and honestly, almost all the time. But this is really getting pretty bleak for home builders now. Mortgage applications at these home builders down more than 40%. Even when people will apply for a mortgage and try to qualify for a new house, with the way the payments are, the interest rates now, the payments are completely unaffordable. So they're trying to get these people to buy houses with these gimmicky loans now, 2-1 buy downs and, different things like that to get the lower initial payment. Still, a lot of them can't even qualify for those gimmicky deals, which I, in good conscience, wouldn't put my customers in. The bad news for builders is not only are they not getting any applications, but now traffic at their models where they sell these houses has fallen off a cliff. No one's even bothering to look at new houses anymore. The prices are high, rates are high, payments are high, and people are just taking a wait and see, let's see what happens. And even the people who did buy houses and can qualify, crushing cancellation rates. KB Homes comes in, says they have a 35% cancellation rate. I'm telling you right now, that's high. I was reading a report that said in Phoenix, Arizona, home builders are seeing cancellation rates of 70%. 70%. It's crazy. Builders stocks, listen to this, guys. Builder stocks right now are selling for about 4 to 5 times earnings per share. That is not a very high PE ratio, right? So their stocks are beaten down. And the funny thing is, with all this negativity, everything looking pretty bleak for builders and everybody else in real estate, they're still saying that they believe prices are going to hold up. So this just goes to show you the delusional world we're in, where people just don't want to come to grips with reality that one or the other is going to give, man. Either the prices on houses are going to come down so people can afford the payments with these new rates, or the rates are going to come back down so people can afford the payments at these gigantic prices. But if they bring rates down, now we start the whole inflation thing. And when you launch from where we are now, where they're expecting, CPI to come in at around 8% this month, well, not a good thing when you blast off from there. Now you're looking at well over double-digit inflation, and everybody starts to really go crazy. So anyway, guys, election day today. We're going to be watching the election. We're going to talk about it tomorrow. I'm sure we're going to have a lot of analysis. We'll see how the markets react to the news. Not only are these interesting elections for politicians, but there's all kind of major initiatives on the ballot all over the place with regard to all kind of different things that people are interested in. So we'll be talking about that tomorrow, how markets react, kind of try to get an idea of what we can get the compass out and see if we can find our way north, where maybe we can find a way to get out of a completely defensive posture and maybe look for some opportunities. Anyway, guys, that's all we have for today. We appreciate your guys' support. As always, if you like what you're hearing, please hit the like button, share the video with your friends, subscribers, ask your questions in the comments section. We appreciate all you guys do to keep the channel going, and watching and everything you guys do. Tomorrow's an interesting day. We'll be back to report on it all. Till we talk then. Thanks.